Welcome back to another videos. Join us for the latest news, insights, and updates on the Iraqi dinar. Don't forget to like, subscribe, and share your thoughts in the comments. Let's explore the world of the Iraqi dinar together. The foreign exchange market experienced notable movements on Tuesday, with the US dollar gaining strength against a basket of currencies. This surge was attributed to a scaling back of expectations for near-term rate cuts by the US Federal Reserve, prompted by hawkish comments from European Central Bank, ECB, officials. Additionally, concerns over potential attacks on ships in the Red Sea weighed on overall risk sentiment. Against a basket of currencies, the US dollar rose by approximately 0.3% to 102.94, building on the previous day's gain of 0.2%. The euro, on the other hand, faced a 0.3% decline to $1.0912, marking its most significant one-day percentage drop in 2 weeks. Sterling also experienced a dip, down 0.38% to $1.2679, stepping back from a near 5-month high reached in late December. The driving force behind the dollar's ascent was attributed to comments from ECB officials expressing reluctance towards early rate cuts. Joachim Nagel, an ECB official, emphasized that it was premature to discuss cuts as inflation remained high. This stance cast a shadow on the global interest rate outlook. Market participants reacted to these developments by adjusting their expectations for the ECB's deposit rate cuts, with money markets pricing in 145 basis points of cuts this year, likely beginning in April. This shift in sentiment was compounded by escalating concerns about disruptions in the Red Sea, contributing to some safe haven demand. In response to the geopolitical tensions in the Red Sea region, an official from Yemen's Houthi movement declared the group's intention to expand its targets to include U.S. ships. This declaration raised concerns and further impacted risk sentiment in the market. Consequently, both the Australian and New Zealand dollars, considered proxies for risk appetite, depreciated sharply, falling more than 0.5% to their lowest levels in a month. Investors turned their attention to Christopher Waller, a Federal Reserve official, scheduled to speak later in the day. Waller's dovish turn in late November had previously influenced market dynamics. The market was now adjusting its expectations for Fed rate cuts, with a 66% chance of a 25 basis points cut in March, down from 77% the previous day. Despite the shifting expectations, traders were projecting cuts of approximately 160 basis points throughout the year, up from 140 basis points projected the previous week. There was a growing belief that the market might have been overly aggressive in pricing in nearly 725 basis points cuts from the Fed in 2024. Analysts suggested that if markets reassessed easing expectations and pushed short-term interest rates higher, the US dollar could find support. The yield on 10-year Treasury notes increased by 5.3 basis points to 4.003%, while the 2-year US Treasury yield, closely associated with interest rate expectations, rose by 7.3 basis points to 4.211%. These movements reflected the evolving perceptions of future monetary policy. Looking ahead, the market anticipated a data-heavy week with reports on Chinese fourth-quarter growth and U.S. retail sales scheduled for Wednesday. Sterling traders were particularly focused on jobs and inflation data to refine their interest rate models. the Bank of England was expected to implement around 120 basis points of rate cuts in 2024, with the first one likely in May, according to market pricing. Meanwhile, the Japanese yen weakened by 0.29% to 146.15 per dollar following data that showed Japan's wholesale price index unchanged in December from a year ago. This marked the 12th consecutive month of slowing wholesale price inflation, hinting at a moderation in consumer inflation in the coming months. These data dynamics alleviated pressure on the Bank of Japan, BOJ, to phase out its massive stimulus soon. Expectations of a policy shift from the BOJ had initially strengthened the yen at the end of 2023, leading to a 5% gain against the dollar in December. However, the yen had since depreciated, down 3% in January, as the data suggested a more prolonged period of stimulus. This underscored the intricate interplay between economic indicators, central bank policy expectations, and geopolitical events shaping the complex landscape of the global foreign exchange market. Thanks for watching Iraqi Dinar. Don't forget to subscribe, hit the bell icon, and share our videos. Your support keeps our channel going. Stay curious, and see you in the next one.